Hi, welcome to another video in the AS A-level managerial accounting series. In this video, we are going to understand the activity-based costing concept. So activity-based costing is one of the techniques to absorb overheads over the products. So if you remember one of my videos on absorption costing, or where I made a series of videos on absorption costing, the costs of a product can be divided into direct cost and indirect cost or overheads. The direct cost can be associated directly with the product. So you know what is the direct cost per unit for any product that you manufacture. But when it comes to overheads, overheads are incurred for the entire organization. They are not incurred based on the production. In most cases, yes, there are variable overheads also that are directly associated with the production, but there may be fixed overheads also. So overheads in many cases cannot be directly associated with the unit production. So what we do, we try to find out a way to absorb the overheads over to the product, so that when we calculate the cost of the product, and then after that we calculate the selling price of the product to quote to our customer, we have to make sure that we don't miss out on any overheads, because if we miss out on overheads, our cost of the product calculated will be understated, our selling prices will be understated, and we might end up making a loss at the end of the year. So absorption costing is a system where we try to associate a relationship between the overheads and the output that is produced. And how do we do that? Basically, overheads are absorbed to the output using some kind of basis like machine hours, labor hours, or output. And we've already seen these ways in the absorption costing videos. So an alternative to using the traditional absorption costing method is to use the activity-based costing. That also helps us to absorb the overheads onto the product. Let's understand how is it done in the activity-based costing, or also known as ABC. Activity-based costing is a system of costing where overheads costs are first associated with certain activities that are carried out in the production process. What are these activities? These activities are anything that help in the production process and also drive cost for the business. When I say drive cost for the business, it means when that activity is carried out, there is certain cost for the business that is being incurred, and hence these activities drive cost for the business. So the overheads are first associated with these activities, and then based on the relationship between that activity and the product that is being produced, the overheads are then absorbed onto the output. We'll see exactly how it works when we do the example. So important terms that you have to know is, what is an activity? An activity is any event, a process, a task that aims at producing the product or achieving certain results in the organization, and these activities drive cost. So these activities are also called cost drivers. And there's another important term called cost pools. So cost pools are accounts where costs get accumulated. For example, let's say there is a process of placing orders to buy certain raw material. So placing an order is an activity that drives cost, because when an order is to be placed, the purchase department may have to incur some kind of cost, or the salary of the purchase department itself is the cost of the ordering activity. So that's the cost. And when the accounts where these costs are incurred or accumulated, let's say if you're talking about salary, so purchaser's salary becomes the cost pool. Cost pool are accounts that accumulate cost or overheads whenever they are incurred, while cost drivers, in this case, the process of ordering a raw material, whatever quantity is required, that entire process is called the cost driver. The placing the order is the cost driver. Quick glance at the traditional costing versus activity-based costing. Under traditional costing, first we choose a base. That base could be labor hours, machine hours, or even blanket rate based on an output. What base we choose, it depends on the importance of labor hours in the production activity, or it depends on the importance of machine hours in the production activity. It depends from business to business, and accordingly we choose a base differently. Then using that base, an overhead absorption rate is calculated. Then using that overhead absorption rate, the overheads are absorbed onto the output. If you want to know about this in detail, you will have to go and watch the absorption costing videos in the Managerial Accounting Series, AS A-Level Managerial Accounting Series. Then what happens in activity-based costing? Cost pools are calculated. So let's say if I talk about the salary that has to be paid to an employee, how much is the total salary paid? That is calculated. So that is the cost pool, and the frequency of cost drivers. So how many times that activity has been undertaken that has driven the overall cost, the number of times the activity has been undertaken, that has to be counted. And then the cost driver rate is calculated. And finally, using the cost driver rate, the overheads can then be apportioned over the output. The entire purpose of the traditional costing, you say, or the activity-based costing, is ultimately to calculate the cost of the product. So activity-based costing is just an alternative way to the traditional costing to apportion the overheads onto the output. So now let's have a look at an example using the traditional costing method first. A firm manufactures two products X and product Y. The following data is available for 1 month. Demand is given. How many units will be produced for each product? Direct cost per unit is given. And machine hours consumed in producing each of these products per unit is given. The budgeted factory overheads for the month were 342,000 and currently being absorbed using machine hours. So we'll be using machine hours as our basis to calculate the overhead absorption rate first, and then absorb the overheads to the products. So to calculate the overhead absorption rate, in the numerator you would have your budgeted overheads, and in the denominator you will have your budgeted machine hours. Budgeted overheads is given 342,000, but total budgeted machine hours are not yet given, or not given directly. We'll have to calculate. So machine hours, they're producing two products, product X and product Y. Product X, they're producing 10,000 units, and each unit of product X would need 2.5 machine hours per unit. So total machine hours for product X would be 25,000, and product Y, they're planning to produce 14,000 units. Each unit of product Y would need 0.5 machine hours, so 7,000. So total machine hours required for this entire batch of production would be 25,000 plus 7,000, 32,000. So in our overhead absorption rate formula, 342,000 divided by 32,000 machine hours. So we get a rate of 10.6875. I'm going to round it off to $10.69 per machine hour. Now calculating the cost of the product. So cost of any product is equal to the direct cost plus indirect cost or the overheads. So for product X, the direct cost is $100. That's given directly here in the second row of the table. And to calculate the overheads, product X will need 2.5 machine hours to get produced. So 2.5, and for every machine hour it takes, the cost incurred for the organization is $10.69, which is the overhead absorption rate. So 10.69. So the total cost of production for product X would work out to 126.73. Same way for product Y, direct cost is $50 plus 0.5 machine hours into $10.69 per machine hour. So the total cost of production works out to $55.35. So this is how you use the traditional costing method to calculate the cost of production. First the overheads absorption rate, and then cost of production. Now for the same example, we are going to use activity-based costing so that you understand how is activity-based costing different from the traditional costing method. So same example, a little more information is given. The firm manufactures two products X and Y. Following data is available. Demand same, direct cost same, machine hours per unit same. Then number of orders placed for product X 20 and number of orders placed for product Y 60 orders. Number of production runs 12 for product X and 36 for product Y. So the number of orders and number of production runs that you see, these are nothing but activities or cost drivers. In fact, the machine hours that you see is also a cost driver here, because every time the machine is running or whenever the machine is running, cost is being incurred. We'll see later on when we analyze the cost, you'll understand why machine hours is also a cost driver here. The budgeted factory overheads were 342,000. That was the same in the previous slide also, but here they're giving you the details of the breakup of this 342,000. Machine maintenance 264,000, ordering cost 54,000, production run cost 24,000, total 342,000. So let me correct this. This is 342,000. Okay. So these are nothing but cost pools, because these are the accounts where the cost is being accumulated whenever cost is incurred in the organization. Now we will try to first calculate the cost driver rate using this given information. The formula for cost driver rate is equal to the cost incurred for any particular activity divided by the number of times the activity is taken or is conducted, or the number of times the activity has taken place. For example, if we go back to this, let's talk about ordering cost. $54,000 have been spent when orders were placed. So now you have to see, whenever an order is placed, the cost, there's some cost for the organization, and that overall cost for the year is 54,000, or for the month is 54,000. Now you have to see how many orders were placed. So for product X 20 and for product Y 60. So overall 80 orders were placed and the ordering cost for 80 orders was 54,000. So what we're going to do is we're going to calculate how much is the cost every time an order is placed, cost per order placed. So I'll go to the second one here, ordering cost. So $54,000 was the overall ordering cost and 80 orders were placed during the year. So if we calculate the cost per order, it comes to $675 per order. So this is the cost driver rate when it comes to the ordering activity. Same way, let's do for the production run cost. So production run cost, 24,000 was the total production run cost. And how many production runs have taken place during the year? 12 for product X and 36 for product Y, overall 48 runs. So let's calculate how much would be the cost per production run. So 24,000 divided by 48 runs or production runs. So it works out to $500 per production run. Now let's do for machine maintenance. For machine maintenance, the cost given is 264,000, but you don't see any additional activity given. What will be the cost driver when it comes to machine maintenance? See, more the machine is working, more will be the maintenance. If a machine is working more hours for product X, then obviously maintenance cost will be more for product X. So what we are going to do is we are going to use total machine hours as the cost driver here to calculate the cost driver rate for machine maintenance. And we've already calculated the total machine hours required for product X and product Y in the previous slide. If you remember, it was 25,000 for product X and 7,000 for product Y. So overall 32,000 hours machine hours the machine would run for 32,000 hours, and that would lead to a machine maintenance cost of 264,000. So how much would be the cost per machine hour, maintenance cost per machine hour? So 264,000 divided by 32,000 machine hours, that will give us a cost driver rate of $8.25 per machine hour. So till now we've calculated the cost driver rate. Now in the next slide we will see how can we use this cost driver rate to absorb the overheads onto the products. So we'll use this table as a way to calculate our cost of production per unit. That's what we want at the end. First we'll analyze the overheads cost. So overheads cost, there are three overheads here: machine maintenance, ordering cost and production run cost. We've calculated the cost driver rate or the overheads cost per unit of cost driver, but now we need to see how much is it in total for individual products, product X and product Y. So if you remember, the machine maintenance cost was $8.25 per machine hour. So if we multiply this 8.25 with the individual machine hours consumed for product X and product Y. So just to do it in detail for this particular overhead, 25,000 was for product X and 7,000 was for product Y machine hours. So I'm going to multiply $8.25 here and here. So we'll get the overall machine maintenance cost individually, for product X and product Y. So for product X, it works out to 206,250, and for product Y, it works out to 57,750. If you calculate the total, it will be equal to the total machine maintenance cost, and that is obvious. Next, the ordering cost was $675 per order. So if you remember, 20 orders were placed for product X and 60 for product Y. Let me just do one thing. I'll just take you back to the question and show you here. 20 and 60 for product X and product Y, number of orders. So when the 20 and 60 individually are multiplied by the cost driver rate, say, which is 675. So we get 13,500 as ordering cost for product X and 40,500 as ordering cost for product Y. Then production run cost, same way, was $500 per production run. So for product X, it will work out to 12 production runs into $500, and for product Y, it will be 36 runs into $500 per production run. So if you calculate, we'll get 6,000 and 18,000. So here we've just apportioned the overheads to the products in total for now. So when we calculate the total of the three overheads for each of these products, we'll get for product X 225,750 and 116,250 for product Y. The demand or the output that is being produced for these products is 10,000 units for product X and 14,000 for product Y. Now we are calculating overheads per unit, which is the total overheads divided by the output. So for product X, it will be 225,750 divided by 10,000. So 22.58. I'm rounding it off to 2 decimal places. And for product Y, it is going to be 116,250 divided by 14,000, $8.30. Direct cost was also given in the question. So $100, $50. So production cost per unit, as per ABC, we're going to add the overheads per unit and the direct cost. So 122.58 and $58.30. So this is how you get your cost of production when using ABC. Let's compare this production cost to the production cost that we calculated using the traditional costing method, because obviously if overheads are being apportioned differently, the cost will also differ. So the product cost as per the traditional costing method we calculated in the first example that we did was $126.73 for product X and $55.35 for product Y. So if you compare, in our traditional costing method, the product X was the cost for production X was higher compared to the ABC, while for product Y it was lower when compared to ABC. And why did this happen? Because as per the traditional costing method, when we apportioned the overheads, a high proportion or a high amount of overheads were assigned or apportioned to product X. But when it came to ABC, here more overheads are apportioned to product Y. So we can say that ABC is a more detailed way of analyzing and apportioning overheads. It is more accurate and better than the traditional costing method. So here you get a more accurate cost of production per unit, and advantage is that when you use this cost to quote a selling price to your customers, the selling price that you give will not be will not differ from the market price or from your competitors, and there are higher chances that you will get the orders also from your customer and you'll also make a profit. Obviously, there may be some advantages and limitations or disadvantages of ABC. Let's go through them. So advantage of using ABC is it helps in getting a more accurate and realistic cost of production. When you start identifying or breaking down the overall overheads into various cost pools and understand what are the cost drivers that drive cost for each cost pool, you'll also be able to understand where the business can cut down on cost or become more efficient when it comes to driving activities, or having certain activities in the production process, or no taking such decisions. So this will lead to better efficiency in the business. Versus, let's say if you know your overall overheads, but you don't know what is the breakup of these overheads, or you've not analyzed these overheads in detail, you will never come to know how can we cut down on our cost, cut down on our overheads. So ABC gives you that advantage. It will help a firm to have better control over cost. Coming to disadvantages, it is more time consuming, because identification of cost drivers, then calculation of cost pools, then cost driver rate, you will need to have detailed records to make sure that the calculations are correct. And even to do the calculations, you may have to have a separate staff, separate system of ABC. So it's time consuming and expensive. And some overheads cannot be associated with any particular cost driver or activity. So such overheads, it may be difficult to apportion over the products based using the ABC, and the traditional approach may be required for such cost. Examples of such cost, let's say the salary of the CEO of the organization. You can't link it to any particular activity. It is a general overhead or a general cost of the business. So such overheads may, you may find it difficult to relate them to a particular cost driver or activity. So I hope you understood this topic well. If you understood it, if you enjoyed the video, please like the video, please share the video with your friends, subscribe to the channel. Many more videos will be coming up in the future. I'll see you soon in the next video.